All right, morning everyone. Welcome to another episode of the Daily High. I will be your only host once again, and we are going straight to the charts. I need to get on the road, so the show is coming to you early, and it's probably be on the shorter side. Surprisingly, I'm not going to have a lot to say. You can see that the monthly chart is at a monthly low. And we are back below that trend line that we pierced for a little bit, and we're now back below it. The monthly MRI count is still very, very bullish, which still makes me bullish for a bull run this, halving cycle. The weekly chart is doing what we expected. It's a continued pullback with the weekly chart giving us some support in the $107,000 range, unless, of course, we end up with a red star candle, creating an environment where we will actually be pulling back into an MRI buy situation, like what happened in the first half of 2025. It will kind of suck, but the ultimate support in that situation is pretty much the same as we had the support back in the first half of 2025. That support will be the 50-week moving average, which is sitting all the way down in the $96,000 zone. I don't want to see us go that low. I really want to see us hold 107. The daily chart, this is where the magic is happening right now. We are right at my target. This is actually a good thing happening right now. What we are looking at is an MRI buy situation. So today is the day to try and buy the dip. And what is really important is to avoid a double bottom. And how can we avoid a double bottom at this point? Well, since we were not able to find support in the 116 range, the only way to avoid a double bottom situation and still reverse with the daily MRI buy is to actually fall below 110. If we can crash below 110 today, then close the candle on a little bit of an uptick and have a really good update tomorrow, taking us back above 112, we will create the only buy the dip scenario, avoiding the 107 fate. At this point, I would like to see us, find support at that next moving average. But at the same time, if we hit the moving average, we're weakening the moving average. So if we can avoid it and allow the moving average to go up, that's great. Right now, we are right at the worst area we can be at. We are at the double bottom scenario, and I can't stand double bottoms. I would love to avoid a double bottom, like I just said. Even if we go below 111, like we don't have to go below 110. Even if the price today falls below 111, maybe it will do it into the 10 a.m. reversal. If at 10 a.m., the price of Bitcoin is sitting below 111, I will likely be really itching to buy that dip below 111 at 10 a.m. Eastern time for the reversal. That would be perfect. However, we would still need a clear lower close. Like, I really want to see us have a lower close at this point. Now, it's also a little bit dangerous to get lower lows and lower closes because we're comparing it to the last time we were in this vicinity. But the last time we were in this vicinity, we had incredible support at the 50-period moving average. And now that same 50-period moving average is going to act like a gorilla resistance, basically, which is going to be a problem when we, rally back up in a dead cat bounce and see if we can still go higher. It will be a challenge, and hopefully Bitcoin will meet it. But look at the perfect reversal off the MRI top. And why not? Why can't we have a similar perfect reversal off the MRI buy situation? It's always a lot scarier to buy a dip like this But a lot of people also didn't get out at the top like this, even though I've been telling people that this is what is going to happen. And yeah, so here's where we are. Now, if this was the low, now what happens if this was the low and we're in a double bottom situation? I am actually not as crazy about buying it if this is as low as we go. I am more eager to buy it below 111 than I am right now. It's only $1,000, but this is also a daily chart, and a daily chart creates a swing trade. It doesn't create a long-term position. These are very, very different things. From a long-term position, we are very bullish on a monthly chart. You should have bought your Bitcoin yesterday, right? From a weekly position, I'm even more cautious than the daily position. Like the weekly is actually scaring me a lot more than the daily is. Now, if we rally for 1 to 4 candles and we do get rejected somewhere between 113 and 116, and we start to drop really hard, now the daily will be bearish in line with the bearish weekly, giving us a weekly red star candle, and now we're kind of fucked and we can go into the $90,000 range. So Bitcoin is in a very, very tricky situation. You're watching a little bit of a bounce here on the short-term chart. Would be nice to maybe get one more of those green diamonds on Matt McGregor's indicator. We are coming into this buy zone. See, we avoided this buy zone last time. We, reversed right above it, which didn't create the perfect buying opportunity. But this buy zone could be pretty damn good. Again, if we can fall below 111, if we can do this today, if we can fall below 111 in the next few hours, that could generate an incredible buy to dip opportunity. So be vigilant and watch Bitcoin like a hawk for the next few hours, basically. I'm going to be on the road, so I won't be buying any dips unless I pull the car over. So, but again, these videos are just my views on the markets. 1 hour chart, any MRI buys coming up? Maybe, but it'll take a few more extra hours. This would come in way too late in the day. Keep an eye on the hourly MRI buy. It would come in about 5 hours from now, but 10 a.m. is it an hour and a half? Yeah, the hourly MRI buy is going to come in like 2 p.m. That's not the ideal time to buy. 2 p.m. on a Friday is like the worst time to buy. You know me, I'm always scared. Bitcoin always falls on the weekends. You get this occasional weekend where it rallies 5%, but most of the time, Bitcoin pulls back on the weekend. I do like the samurai buy, but it's not coming in the best of places, in the best of environments. So, make your own decisions here. I'm still bullish for the cycle. I think the cycle is going to top early next year, and I still think we're going to break 140. Bitcoin dominance, I'm expecting to rise as well. And gold is not doing anything interesting. Silver not doing anything interesting. Oil not doing anything interesting. What do we got here? S&P on the daily chart. S&P has been pulling back, probably because the Alaska talks will lead to nowhere. I gotta do this video just shit talking Trump's decision making. And yeah, we have to avoid the double bottom on the S&P. The S&P is in better shape. The S&P could give us an MRI buy as well at a higher high. At a higher low. We do have support here at the MRI support line and the moving average. But unlike what happened in Bitcoin, these supports are at a clear higher low, which would be awesome. So if I'm going to change my arrows here, I rarely do that. Because I really thought we could get support at the moving average, but we might not. But if we can make it to down there, I'm going to just adjust these lines, and bam, this looks great, and it's going to pull Bitcoin along with it. What do we got here? The futures markets are rallying right now, but none of it. But it's all irrelevant until 10 a.m. And we have our yield curve. Let me just refresh. Yield curve is rising, so the Fed may have to raise rates, or more likely, Powell is going to get fired. So that's pretty much it for me. Been keeping an eye on shitcoins like Ethereum. And it might have topped. We're going to find out together. All right, quick look at your live chat, and then we're going to get moving. Will you talk about the rising wedge? No. I don't do wedges. I think they're a terrible pattern. They're too subjective. I like my chart patterns that have one static line and one adjustable line. Wedges have two adjustable lines. They have two adjustable trend lines. There's too much variability. I have no idea who Dr. Jack Cruz is. Guys, it's impossible to know everyone. There is a million experts in every single topic. What is happening between us and Venezuela? Oh boy. Guys, my Venezuela takes, I'm going to save those. I'm going to save those till I come back from Latin America. Like my Venezuela views are not standard. And this is not a political channel. Tone-based channel. I'm not sure what the EMI indicator is, but I do need to release the tone-based volume. Look at Tesla. Yeah, I can look at Tesla. It's not that interesting to me. We have a daily bearish posture. Not crazy bearish, but bearish. We have a weekly symmetric triangle happening here with a slight bullish posture. And we have a monthly slight bullish posture. I have no opinion. All right. Thank you so much for watching, guys. Is the bull market over if we get a monthly candle below 100K? No. But if we get two monthly candles below 100K, yes. One candle, no. Because look, we had a nasty crash right here. This was an $18,000 down candle, and it did not derail the bull market. So, but if we had two of these, then yes. So it's the same thing. If we only get one of these, it's like the replication of the candle from February of 25. And we can still recover. And the following monthly candle, yes, it was a red candle, but it was very, very like doji style. So we basically need a candle similar to February of 25. It doesn't have to be as nasty. And then a second candle with also a big-ish body to the downside without a wick bringing it back up. All right. Okay. On this note, I'm going to call it a day. I will look up that doctor, Dr. Jack Cruz. Never heard of him. Quantum biology. I'm not even sure what that is. All right. I'll try. I'll keep an eye on it. Thank you for watching, guys, and I will see you all on the next one. Bye, guys. I'll be doing a lot of grilling this weekend. It'll be fun.